you guys have said that in the FMCG space, it's poised for a second half recovery. We've seen a bit of a corrective move in commodity costs as well, which could help input cost pressures as well. What's your sense on this whole pocket?
So I believe that FMCG is a good defensive bet in the current environment when we're looking at markets being volatile. The the obvious headwind is the weak rural incomes. We have been looking at the rural incomes, the bottom of the pyramid incomes getting impacted. Also the high inflation hits that pocket of the sort of economic segment much more. So clearly there are those demand related headwinds that we need to keep in mind. And the companies have been forced to take price hikes, right, because of the cost increases. And those price hikes then in a way force the price sensitive consumers to downtrade, impacting the volume growth as a whole. So those are clearly the things that are not going to change in a hurry. But what I believe is that it's a sector which is heavily under-owned by both sets of institutional investors, the domestic as well as the foreign institutional investors. And as such, when we're talking about the foreign outflows, etc., FMCG is not a sector that really gets negatively impacted by it because, as I mentioned, it's anyway very thinly owned by the foreign investors. So that's point number one. Point number two is that incrementally speaking, going forward, we believe that the rural story will begin to improve. Although the urban story will continue to remain stronger, but just from a delta perspective, just from the perspective of what is going to be changing, I think at the margin, the rural incomes will slowly be coming out of the trough period that we have been looking at for the last 1 year or so, helped by one, let's say, the rising food inflation itself, which helps the farming community in terms of their incomes.